President Trump says talks with Iran are still moving forward. He says it's not simple, but he's confident that diplomacy remains on track. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Fox Business senior correspondent Charlie Gasparino. If diplomacy remains on track, that track is anything but smooth right now. According to reports, the president put the brakes on Israel's plan to strike Beirut, with Israeli Prime Minister Benjamin Netanyahu standing down after a heated phone call Monday. The president is now signaling a ceasefire extension, and a deal to reopen the Strait of Hormuz could come as soon as next week. That would be critical for global energy markets and regional stability. Now, the markets are watching this closely. Investors focused on oil prices, and rightly so, but also what the latest developments could mean for inflation and the economy. But with mixed signals coming from both sides, questions remain about whether diplomacy is gaining momentum or simply buying time.
Obviously, the Iranians are providing in their statement objectives that we do not want any part of. Likely over the Straits of Hormuz is part of it, I would assume. They probably want upfront goodwill money, Maria, and likely some expression on the nuclear deal that's unacceptable to us. And that's why the president has kicked that back to them. The Iranians are completely sticking to what they're trying to achieve here.
And they are sticking to that. They do want to buy time. It's in their interest, Charlie, to be able to do that. But my question for you is, as you see Trump negotiate this, there's part of me that says this deal should have come faster. We shouldn't be doing a ceasefire at this point. You've been threatening. You have assets in the region. You can take military action, but he's not doing it. And so, you know, the markets are a separate issue, and they're doing well and they're holding up. But with regard to this issue, how do you think he's handling it?
Well, I feel like we did this story last week and the week before and the week before and the week before.
So keep it fresh today. Come on. Give us something fresh today, Charlie.
You want me to say exactly what I said 2 months ago?
No.
I mean, you know, here's the thing. There is a repetitiveness that is absurd in this whole thing. And I think you either, and again, as I said the week before, I got to guess a month ago, I think I made this point. Let's just bomb the you-know-what out of them.
Get on with it.
Or let's go home. It's as simple as that. I mean, I don't think we're gaining anything by doing this. We've decapitated a lot of their leadership. You know, if we have to make, escort boats and tankers through the Strait of Hormuz, yes. I mean, I think the Middle East has learned that you can't be dependent on the Strait of Hormuz anymore and lunatic mullahs. So the Saudis and the Kuwaitis are looking for alternative pipelines. I mean, so all this is in motion, and I just don't know what we're doing there now. It's just, and it's a drag on his presidency. I mean, listen, I mean, we have midterms coming up. If the Democrats take control of the House, he's getting impeached. If, God forbid, and I say God forbid because the Democratic, some of the candidates are so loony. I mean, Graham Plattner, this creepy Tallarico guy who I think bleeds soy milk or something. I don't know what is in his bloodstream. But, I mean, you go down the line. I mean, they're replacing, like, people with some real wackadoos.
Yeah.
And so if they get the Senate and the House, you know, Trump's agenda is done, and he's in the crosshair. So I think, he's got to move.
I hear you on that, but let's just put a pin in it because...
What would General Keane say? I guess that is the point. I understand what the markets like it. Yeah.
Well, this is the thing, and Brian, we've been talking about why we ever stopped, what was it called, a Project Freedom to open the strait,
yes,
right?
That's what I've been saying.
You've been saying that, and it sort of crystallized for me over the last couple of days. My understanding is that the regional allies are not playing ball with us the way they once were. For example, Saudi Arabia not allowing us to access its airspace. That has an impact on whether or not we can move around freely in that region. You don't just open the strait, in the waterways. And so I'm wondering, as the president is facing all these hurdles that he probably wasn't expecting, if that has just complicated this whole thing, and if he does need to buy some time.
Maybe. That's a good point. And I know Oman has been kind of tricky lately, too. So, yes, it's complicated. Look, I'm with you in part, Charlie. We kind of talk about this day after day, and here we are as outsiders trying to figure out what's going on. One thing I think, and I'm thinking about the interaction the President Trump had with Netanyahu the other day, which was feisty. It was a feisty interaction, let's say. I think President Trump is satisfied with the damage we've done to Iran. I think he is satisfied with what we've done to their nuclear program. I think he's satisfied with what we've done to their conventional weapons. I don't think he feels the need to do any more military damage to them. I think what he wants to do is use money as leverage, not bombs. Okay, if you just look at what he's saying and what he's doing, Rubio was up there today talking to the Senate. They were asking him about money. And his whole point is they don't get money until they've shown us that they've done the things we're asking them to do. You can disagree with that as a strategy. Maybe that's not the right lever. But I think this is a president who likes to negotiate more on business terms than on military terms. He feels like he has those terms, and he's trying to use them. So he's saying, you do what we need, we unlock assets. You don't do what we need, you don't get those assets. That takes time. That's not as fast as dropping a bomb. But there are risks. There are risks with the military engagement, too. And I think, at the very least, we ought to appreciate that he's sensitive to the fact that if you restart military operations, that's a different can of worms that you've opened up, and he may not want to go there again.
Okay, and speaking of that, let's talk about this call with Netanyahu, because obviously this is partially how it started, was that alliance coming together, and it seemed like without a few spats over the course of this conflict, the two leaders were getting along well, but two sources were telling Axios, and this is a quote, that Trump said, "You're expletive crazy. You'd be in prison if it weren't for me. I'm saving your expletive. Everybody hates you now. Everybody hates Israel because of this." If that reporting is true, Dagan, there is a rift between these two men, and that also creates a problem for us as we try to move forward in that region.
It is a problem. I think market-wise, you see the 10-year yield below 4.5% today. The 30-year is below 5. Consumer stocks, broadly speaking, have outperformed its expectations. For the Federal Reserve, potentially hiking this year, have pulled back, and that's all related to the cost of crude oil. If you want to take a look at crude. Right now, and Dan Clifton at Strategas wrote about this, the risk is re-escalation to what you were talking about. And all of that would reverse. You would get higher yields, you would get pulled back in consumer stocks, you would get a bigger spike in crude oil prices. And that's what investors at this point are trying to figure out, because they don't. And the betting markets are what a lot of people are watching. And the poly markets anticipate that the Strait of Hormuz, traffic normalizes much later than anybody is anticipating. And even if you look at the Iran or their proxies trying to block the strait that is how traffic comes out of the Red Sea, Bab el-Mandeb, that the betting odds are going up kind of dramatically for that happening in recent days. So that's what I would watch.
And Taylor, markets are patient until the moment that they're not. And they've been patient. Oil's been pretty patient and behaving, pretty much in the range as well. Having said that, it could be one thing that sets this market going the other way.
Yeah. Let me talk about the bad news, and then I'll talk about the good news. When you talk about sort of oil markets and what's waiting, my worry is diesel. We're down to just a 20-day of supply. We could get there by August. In May, we had about 28 days. In January, we had 36 days of supply for diesel, and then we might get down to 20 days. And then what that means is just the pressure. Diesel's already skyrocketing, as it up 45%. That's bad for truckers, it's bad for the economy, and it's bad if we then can't get our hands on diesel. So that, I don't want to say forces our hands, but again, that's more of that timeline about needing to reopen the strait and figure out what we're doing, but the stalemate right now isn't working. Here is the good news. not jobless claims, job openings were incredible. You have 7.6 million job openings, an increase from March, and the most going back since May of 2024. Half of the increase in job openings came for effectively white-collar jobs. AI? So AI is not eating our lunch and our jobs. AI is creating half of the new jobs right now that are out there in the market. Here's another interesting statistic. The chart of the day didn't look great. It kind of looked like your heart going up and down. So I didn't make you, Brian, a chart of the day, but I have a statistic of the day for you.
Okay.
Our 2-month gain in April and May is up 16%. That is only 4 other times that's happened since World War II. And 3 of those, it happened right after a recession. So this is the only time that we've seen a 16% massive gain. And we're not coming out of recession. And bonus round, the other time that happened was right before the 1987 Black Monday crash. So AI, for now, is propelling the market and this economy through the JOLTS numbers and then what we're seeing today into this entirely new level of gains that we typically see when you're coming out of massive recessions and depressions. So for now, this is holding us up. But the diesel and the oil story, I'm starting to get a little concerned.
Let me ask you this.
I would add with diesel, though, diesel prices have pulled back, the retail diesel. So diesel prices have gone from $5.62 a month ago to $5.43.
It's still high, right?
It's not near the record, though.
Yep.
The record was $5.81, and that's still from 22.
Yep.
So if it was, when supplies get dangerously tight, you will see a price spike to create demand destruction. That's what people are talking about.
I guess the question I have is, what's better? If we pull back from Iran right now, or if we maintain the status quo, we've essentially given Iran a put on a big chunk of the supply of oil. And by not wiping them out, they will have that put for forever. They always kind of technically did, they just didn't flex it. Now they have to flex it because it's a matter of survival, okay? So if we don't totally destroy them, they will have a put, at least until pipelines are built and everything else, forever, for a long time.
Yeah.
And that will be inflationary. That, when they do that, when they start throttling the supply in that region because they throw, all it takes is one drone at a ship, and you'll watch the price of oil go nuts if they sink a tanker in the middle of this Strait of Hormuz. I mean, that's going to be a real problem, and I think they have to come to terms with this. And so I think if General Keane was sitting right here, I think he'd agree with me. Obliterate and let's go home, because you can't let them have the put. The other thing with AI, which is fascinating, I think, is the build out of AI is now obviously job positive. I mean, it definitely is on a lot of different levels. Andy Kessler in the Journal wrote this amazing story, because Andy's an old source of mine, because he used to be a tech analyst. And we remember back in the early days of the internet, by the way, salaries for print journalists were going through the roof because everybody was starting their own website and they needed to man up. And guess what happened after that? They all got wiped out, because guess what? The internet essentially decimated newspapers. It made it all free. So there is a thing here with AI where now chips cost a lot of money. AI, to use AI for certain applications, costs some bucks. At some point, all this AI competition is going to bring all those costs down. Those stocks will come down to earth. The AI hiring will stop. When that happens, I can't tell you, but it doesn't take forever.
Yeah, but then you would say you get a diffusion of AI use across the economy. That was Andy's point. That piece.
Productivity, but the prices are going to come down.
Yeah.
The froth will leave.